Should I rebalance using my taxable brokerage account or my retirement account? So the answer depends on your personal situation, but here's a general rebalancing strategy that minimizes your tax bill. It's a two-step approach. First, rebalance using losses from your taxable brokerage account. Two, then rebalance using positions in your retirement account if needed. So why this order matters. When you sell gains in a taxable account, you immediately owe capital gains taxes. That's money you could have kept invested and growing. But in your retirement accounts, you can sell anything without tax consequences. This makes them ideal for rebalancing when you need to trim positions that have grown too large. But let's go deeper into each step. Step one, start with tax loss harvesting in your taxable account. First, look for positions trading at a loss in your taxable brokerage account. When you sell those at a loss, you can use those losses to offset capital gains, reducing your taxes. This is called tax loss harvesting, and it's one of the most powerful tax strategies available to investors. Three important things to remember when you do this, though. Save $3,000 in losses for income offset at the end of the year. You can use up to $3,000 in capital losses each year to offset your ordinary income, which can save you hundreds in taxes. So try to preserve this amount. Number two, keep some losses in reserve for year end. You may want to save some losses toward the end of the year in case you need to sell gains and want losses available immediately to offset them. And three, stay invested. Most of the time, you should not stay out of the market. Immediately reinvest in similar but not identical positions to maintain your market exposure. For example, if you sell an S&P 500 ETF at a loss, you could buy a total market ETF. After 30 days, you can switch back to your original position if you want. This avoids the IRS wash sale rule. And then step two, use your retirement accounts for the rest of the rebalancing that you want to do. After you've harvested available losses in your tax account, complete any remaining rebalancing in your IRA or 401k. Since there are no capital gains taxes in retirement accounts, you can sell winners without triggering a tax bill. So when should you rebalance? Ideally, instead of rebalancing once a year, look for opportunities throughout the year, especially during market volatility. Every dip creates a potential tax loss harvesting opportunity in your taxable account. So by rebalancing continuously, you're both maintaining your target allocation and reducing your tax bill. Quick example. Let's say your target allocation is 70% stocks, 30% bonds. After a strong rally, you're now at 75% stocks and 25% bonds. You want to go back to your 70-30 target. Check your taxable account. Do you have any stock positions at a loss? Sell those, harvest the tax loss, and reinvest in bonds or a similar stock position. Sell some winning stock positions tax-free and buy bonds to get those back to 70-30. This strategy keeps you invested, maintains your allocation, and minimizes taxes. The bottom line, prioritize tax loss harvesting and taxable accounts first, then use retirement accounts to complete your rebalancing. And don't wait for annual rebalancing. Do it whenever opportunities arise. And soon, Advizmo will be able to automate a lot of this for you. So stay tuned.